out of this session today that you take away?
A few good things coming out of the market today. First of all, in the financial space, we continue to see some companies making 52-week highs, and that included BT Investments today as well as Suncorp Metway. TPG also having a fantastic performance after its full year numbers yesterday. Brokers coming out to upgrade their 12-month targets on that stock, and that stock was up by almost 6%, but not so good today for New Hope Corporation. This was another one that came out with some numbers yesterday, but the stock down 3% today. Not surprising to see that it was the commodity-based stocks which did see the steepest losses, and we started to see a little bit of positioning ahead of this FOMC meeting tonight. Iron ore prices down by 2.2% at $131.50 US a tonne. Oil prices at 6-week lows, copper prices holding steady but still near 5-week lows. So the energy and the materials sector, the worst performing areas on the market, and instead we did see investors and traders looking for shelter in some of those defensive areas. So it was a little bit about safety today, but really just treading water ahead of that FOMC meeting.
Reading a little bit about this, does it support the argument for QE, tapering, even a mini tapering, particularly when the unemployment rate has been what's been pointed to as a key determinant?
And I guess that's one of the things about the US economy. While the numbers have been getting better, we know that the jobs market is still in the doldrums. We're nowhere near a 7% unemployment rate target for the US, and inflation of 2% as well, which was mentioned in the past. But if we have a look at what markets really are looking for, what the markets want is certainty. They've been butted up for tapering now, and they're expecting to get some sort of small token tapering. And if we get that, I think that's going to be a positive for markets. Getting over the idea of tapering. We have seen some of those commodity-based areas coming under a fair bit of pressure now. But I guess if we have a look at markets once again and expectations around when quantitative easing is going to come to an end, the market's pricing in a 50% probability that we're going to see a 50 basis point hike by the end of 2014, and a 100% probability that we're going to see a 25 basis point rise by the end of 2014. So the market's expectations are that we are going to see the end of quantitative easing by the end of next year, and a move in September would be wholly expected by the market. I think in the vicinity of about 10 to 15 billion is what's priced into the market at the moment. No taper, I think, will come as a surprise to the market, and a tapering package of $20 to $25 billion would be considered large and possibly a small negative.